AMAT down 14.51%. This is Thursday, the 14th of August. Post market session into a day low 16.15. It's earnings disclosure related. We'll get to that. So yeah, this is what we're looking at right now. That's the plunge. We have weakness is expected to remain in place up till the pre-market session of tomorrow. Ultimately, it's just a bounce that is expected, an accumulative contraction. So, if you like, the algos are, extrapolating that the buyers are going to come for this. They're going to come and start buying this, but they're not going to buy it with a. It's not going to be a V rebound. It's just going to be a consolidation amid buying as well, or rather consolidation with buying, with the bias with some buying, with a decent amount of buying. That's what it's extrapolating. Let's have a look and see upper projections currently in play. We have 177.25. Current price is $162. So 177 just printed now. Upper projection. Yeah, then before now, we had 190.05 just before the market closed. Let's see. Then we had below that 187.92, 181.13, 177.85, 175.82. We also have 188.35, 186.39, 182, 183.23. We also have 191.51, 192.7. I'm not sure if we saw only 190. I think, yeah. So there's 191.51, 192.78. Yeah, there's even higher projections. We had 193.15, 196.37, 198.90, 200.45. Yeah, even higher prices, 203.49. So decent amount of room up to the upside. We have the 10 period moving average severely bearish, 21 period moving average as well severely bearish. We have these derivatives still positive, indicating that maybe the weakness is it's either it has lost its edge, or it may continue to print lower prices. But however, as I indicated earlier on, the algos are saying it's gonna bounce. The end is it's just gonna be for this post market session. Yeah. So let's see what the readout is. It's the company disclosed its earnings outcomes. Let's see.
Applied Materials, After Hours Spotlight, Earning Strength Meets Geopolitical Headwinds. Applied Materials is commanding attention in after hours trading following the release of its fiscal Q3 2025 earnings, with retail and institutional investors dissecting not just the raw numbers, but the implications for the coming quarters amid ongoing tariff uncertainty and evolving US China tech relations. Market reaction and sentiment shift. Initial market chatter shows that bearish expectations, rooted in fears of a post earnings dip, played out briefly after hours, reflecting caution over the geopolitical backdrop and macroeconomic noise. However, given the company's strong quarterly delivery and positive signals from the semiconductor demand cycle, especially driven by AI adoption, some traders are already positioning for a potential rebound. Record setting financial performance. Revenue $7.30 billion, up 8% year over year, and the highest in company history. Margins, GAAP gross margin at 48.8%, with non GAAP at 48.9%. Operating profitability, GAAP operating margin of 30.6%, with non GAAP at 30.7%. Earnings, GAAP EPS of $2.22 plus 8% year over year, and non GAAP EPS of $2.48 plus 17% year over year, both ahead of consensus. Segment performance highlights: Semiconductor systems. Revenue rose 10% year over year to 5.43 billion, with margins improving to 36.2%, underscoring demand for advanced node manufacturing equipment. Applied Global Services, 1.6 billion in revenue, with a 27.8% operating margin, benefiting from increased equipment utilization and long-term service contracts. Display segment, 263 million in revenue, with a sharp margin improvement from 6.4% to 23.6%, suggesting operational efficiency gains and higher value product mix. Strategic and competitive positioning. AI and high performance computing tailwinds. Applied is benefiting from the surge in AI and high performance computing demand, which require more complex, higher margin semiconductor fabrication tools. Resilient supply chain. Management emphasized the advantage of its diversified global manufacturing footprint to offset regional bottlenecks. China exposure. While geopolitical risk remains, Applied continues to work within regulatory constraints, focusing on non restricted product lines and expanding its customer base in other regions. M&A potential. Some in the investor community speculate Applied may pursue acquisitions to consolidate capabilities in specialty processes or AI optimized chip making, leveraging its healthy balance sheet. Looking ahead, guidance for the next quarter will be closely scrutinized, particularly regarding export restrictions and tariffs. Bulls argue that secular semiconductor demand growth could offset near term policy friction, while bears see geopolitical risk as a cap on upside. In either case, AMAT's mix of record profitability, operational efficiency, and strategic adaptability positions it as a central player in the unfolding AI driven chip making boom.